Something very significant just quietly moved through the US banking system, and you are not going to want to miss this. This just came out, and people are reaching out about this in huge numbers right now, asking what it means for their savings, their direct deposits, and the money they count on every single month to pay their bills and cover their expenses. There are multiple updates happening all at the same time right now. And if you have a bank account, if you receive your Social Security payment by direct deposit, if you have a savings account, a certificate of deposit, or any kind of retirement fund sitting in a financial institution, what I am about to share with you could directly affect your money this year. A quiet but significant change has been moving through the United States banking system, and it is now raising serious concerns among financial experts, consumer advocates, and retiree organizations across the country. Stick with me because I am going to walk you through exactly what is happening, why it matters so much for people on fixed incomes, what the experts are saying, and what you can do right now to make sure your money is protected. I am going to explain everything in plain, clear language because that is what you deserve. No banking jargon, no complicated financial terms, just honest, straightforward information delivered directly to you. If you are joining us for the first time, welcome. We are here every single day covering the updates that matter most to seniors and retirees living on fixed incomes across the United States and Canada. Make sure you stay all the way through to the end because near the close of today's update, I am going to share something very specific about how this banking change could affect the timing and safety of your direct deposit payments and what steps you can take immediately to protect yourself. That is something you cannot afford to miss. So let us build the full picture together, starting right now from the very beginning. To understand what is happening in the banking system right now, you need to understand a little bit about the environment that banks are currently operating in because context is everything. The past 2 years have been extraordinarily turbulent for the American banking sector. Rising interest rates, shifting deposit behaviors, commercial real estate pressures, and a series of high-profile bank failures have put the entire industry under a level of scrutiny not seen since the financial crisis of 2008. Now, the situation today is not a repeat of 2008. I want to be very clear about that. The overall banking system remains functional, and most major institutions are on solid footing. But there are specific quiet changes happening right now within the regulatory and operational structure of American banks that deserve your attention, especially if you are a retiree or a senior living on a fixed income. Let me tell you exactly what these changes are and why they matter specifically for you. The first and perhaps most significant change involves new federal banking regulations that are being implemented this year around how banks are required to hold and manage deposits. Under updated guidance from federal banking regulators, certain categories of financial institutions are being required to hold larger reserves against specific types of deposits. This is known in banking terms as liquidity coverage requirements. Now you might be wondering what that has to do with your savings account or your direct deposit, and that is exactly the right question to ask. When banks are required to hold more money in reserve, they have less flexibility to offer competitive interest rates on savings accounts and certificates of deposit. In a practical sense, this means the money sitting in your savings account may earn even less going forward than it already does. For a young person with decades of earning ahead, a lower savings rate is an inconvenience. For a retiree living on a fixed income where every dollar of interest income matters, it can genuinely affect your monthly budget. People are reaching out right now saying their savings account interest rates have already dropped noticeably in recent months, and they want to know why and whether it is going to get worse. The honest answer is that between these new reserve requirements and the Federal Reserve's ongoing interest rate decisions, the environment for savings account yields is going to remain challenging for retirees throughout this year. I will keep you updated as the Federal Reserve makes its upcoming rate decisions, because those decisions have a direct impact on what your savings earns and what you pay on any outstanding debt. Now, let me move to the second major development within this banking update, because this one is generating even more concern among our community, and rightfully so. There have been significant changes happening around the rules and oversight structures governing smaller and mid-sized regional banks. And this matters enormously for retirees because a very large number of older Americans do their banking with regional and community banks rather than the large national institutions. Regional banks have historically been where many seniors feel most comfortable. The staff knows your name, the service is personal, the branches are often closer to home, and many seniors have had accounts at the same local bank for decades. But here is what is happening right now that you need to know about. Federal regulators have been implementing stricter oversight requirements for regional banks, particularly those with assets between $100 billion and $250 billion. These are not tiny community banks, but they are also not the massive national banks most people think of when they hear the word bank. The stricter oversight includes more rigorous stress testing, higher capital requirements, and enhanced reporting obligations. The goal from the regulator's perspective is to prevent the kind of sudden failures that rattled confidence in the banking system when several regional institutions collapsed in recent years. That goal is understandable and in many ways appropriate. But the unintended consequence that consumer advocates are raising right now is that these increased compliance costs may cause some regional banks to scale back services, close branches, raise fees, or in some cases merge with or be acquired by larger institutions. For retirees who depend on in-person banking, who may not be comfortable with fully digital banking, or who live in rural areas where a local branch is the only accessible option, any reduction in regional banking availability is a serious quality of life issue. This is not a theoretical concern. Branch closures at regional banks have been accelerating across the country for the past several years, and the new regulatory environment is expected to continue that trend in 2025 and beyond. I want to make sure every person in our community is thinking about this, because if your local bank closes or merges, your direct deposit setup, your account numbers, your automatic bill payments, all of these things could be disrupted. And for someone on a fixed income where every dollar and every due date matters, that kind of disruption is not a minor inconvenience. It is a real financial emergency if you are not prepared for it. Let me tell you right now what you can do to protect yourself, and I will come back to this in more detail toward the end. First, know the financial health of your bank. You can look up your bank's rating and health score through resources like the Federal Deposit Insurance Corporation, which most people know as the FDIC at fdic.gov. Second, make sure your deposits are within FDIC insurance limits. The standard coverage is $250,000 per depositor per institution per account category. If you have more than that at a single institution, which is less common but does happen with people who have substantial savings, you may want to review how your money is structured across accounts. Third, keep a record of all your automatic payments, your direct deposit information, and your account details somewhere safe and accessible so that if anything changes at your bank, you can act quickly. I will keep you updated as the regional banking landscape continues to evolve this year. Now, let me move to the third piece of this banking update, which involves something that has been causing a great deal of confusion and concern in our community over the past several weeks. There have been significant discussions in Washington about the future of the Consumer Financial Protection Bureau, which most people know as the CFPB. The CFPB is the federal agency that was created specifically to protect consumers, including seniors, from unfair, deceptive, and abusive financial practices. It oversees banks, credit card companies, mortgage servicers, debt collectors, and many other financial institutions. Under the current administration, there have been significant efforts to reduce the scope and funding of the CFPB. Staff reductions, operational changes, and legal challenges have all affected the agency's ability to function at full capacity. For ordinary consumers, this might feel abstract. But for seniors, the CFPB has historically been one of the most important lines of defense against financial exploitation and predatory practices. The agency has handled hundreds of thousands of complaints from older Americans about issues ranging from incorrect billing on Medicare supplements to illegal debt collection tactics to fraudulent financial products targeting retirees. If the CFPB's capacity to investigate and act on those complaints is reduced, it means there is less protection standing between you and the financial actors who may not have your best interests at heart. People are reaching out right now asking what they should do if they experience a problem with their bank or a financial company and the CFPB is less accessible than it used to be. Here is what I want you to know. You still have options. Your state's Attorney General office has Consumer Protection Authority. Your state banking regulator oversees banks operating in your state. And organizations like AARP have resources and advocates who can help seniors navigate financial disputes. Do not feel like you are alone or without recourse if something goes wrong with your finances. There are still people and organizations fighting for you, and I will always point you toward those resources. I will keep you updated as the situation with the CFPB continues to develop because this is not a story that is finished. It is still actively unfolding. Now, let me talk about something that connects all three of these banking developments together in a way that is particularly relevant for people receiving Social Security, SSI, or SSDI payments. Your direct deposit is the lifeline that connects your benefit payment to your daily life. Most of you already know that receiving your payment by direct deposit is faster, safer, and more reliable than receiving a paper check. But here is something that not everyone realizes. When a bank changes its structure through a merger, an acquisition, or a branch closure, your direct deposit information does not automatically transfer seamlessly in every case. In some cases, routing numbers change. In some cases, account numbers are reassigned. And if the Social Security Administration does not have your updated banking information on file, your payment could be delayed while the correct information is sorted out. This does not happen to everyone when banks merge or change, but it does happen to some people, and for someone living on a fixed income, even a one-week delay in receiving a Social Security payment can create a genuine financial crisis. The best protection against this is to stay aware of any communications from your bank about changes to your account, your routing number, or your branch location. If you receive any notification from your bank that involves changes to your account structure, do not ignore it and do not throw it away. Read it carefully. Call your bank directly using the number on the back of your debit card and confirm whether any action is needed on your part. And if you ever need to update your direct deposit information with the Social Security Administration, you can do that online at ssa.gov, by phone, or in person at your local Social Security office. I know that navigating these systems can feel overwhelming, but taking a few minutes now to make sure everything is in order could save you from a very stressful situation later. Now, let me take a moment to speak to our community members in Canada because several of these banking themes have clear parallels north of the border as well. Canadian seniors have been watching their own banking environment shift in recent years. The Bank of Canada's interest rate decisions have similarly affected what savings accounts pay out for fixed income retirees. Regional banking consolidation is also a trend in Canada, particularly in smaller provinces and rural communities where branch access has been declining. I will continue to bring you relevant updates for both our American and Canadian community members, because financial security for older adults is a cause that crosses every border. I am going to be right here every single day watching every banking development, every regulatory change, every policy shift that could affect your financial safety and your monthly income. When something important happens, you will hear about it here first, explained in plain, honest language that makes sense for real people living real lives on fixed incomes. If today's update helped you understand something that felt confusing or concerning before, please take a moment to share it with someone in your life who needs to hear it. A spouse, a sibling, a neighbor, a fellow retiree at your community center or your place of worship. There are so many people in our community who are quietly worried about their financial security and just need someone to cut through the noise and explain things clearly. This community exists because you deserve better than confusion. You deserve clarity. You deserve someone watching out for your financial well-being every single day. And that is exactly what we are going to keep doing for you without fail. Stay informed, stay protected, and I will be back very soon with the next important update. Take very good care of yourself and everyone you love.